What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about one company, one stock, which is basically selling off quite aggressively, down a little bit over 17, almost 18% at the moment after they reported their earnings. So I'm going to break down exactly what the company does. We have talked about this in the past. I've actually done maybe one video on this company in the past. It is still an underrated stock. It is not very well known. It is not a company that we talk about every day. So it's going to be a little bit of a low-key stock. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. It's the first week of the month, so first week of August. If you want to join, again, link's going to be down below. We'd love to have you on board. So the company that we are talking about today is going to be none other than Zebra Technologies. Yes, ticker symbol ZBRA, and it is down a little bit over. Let's take a look here. Last time I checked, it was down 17%, 18%, so a little bit over 18%, now trading under $250 after they reported earnings. They beat on EPS. They slightly missed on revenue, and I think the guidance was also a little bit of an issue, and right now down over 19%. So what Zebra basically does is that they are both a hardware and a software provider, and they basically create mobile computers. So you know how there's like single handheld devices used by a lot of manufacturing people, a lot of e-commerce, logistics, shipping, even something as simple as let's say that you go to a drive-through, right, and people taking your orders, those handheld devices. That's what Zebra Technologies basically creates. So these handheld devices are used by workers in a variety of industries to collect data, scan barcodes, and access applications. Barcode scanners, RFID readers, printers, software. So that's really where their expertise is in. Now, this right here were the numbers, and we have seen declines on a year-over-year basis, unfortunately, for Zebra. So adjusted net sales were down 17% because of the overall slowdown in just overall e-commerce and, of course, retail spending and manufacturing, and a lot of these sectors have started to pull back and have contracted a little bit, and for those reasons Zebra has not been able to sell as much. Gross profit also down 13.6%, even though margins did improve on a year-over-year basis, up 200 basis points. We did see a little bit of a decline in overall gross profit because revenue was down, and adjusting operating expenses also lower a little bit, and the EBITDA was down almost 20%, and non-GAAP EPS also down 28% to $3.29. Now, this is actually quite a funny slide because they say it's a strong balance sheet, but the company's got $68 million of cash and $2.2 billion worth of debt. So no, Zebra, if you're watching this video, this is not a strong balance sheet. $1.1 billion capacity under revolving credit facility. Free cash flow was negative, and of course down from $267 million on a year-over-year basis because of higher cash taxes and payments for inventory, and $45 million of additional settlement payments as well, $185 million net borrowing, and $52 million in share repurchases. The company has been buying back a little bit of shares, but overall, over the last 9 years, they have increased their share count by about 0.5% per year. Now, when it comes to fiscal year 23 outlook, they are expecting a free cash flow to be positive in the second half of this year, negative for the entire year. And then they're also expecting a net sale decline of about 20 to 23%, over 1 percentage point negative impact from foreign currency basis, $20 million negative gross profit impact from premium supply chain costs for a pre-pandemic baseline. So the numbers are expected to see a bit of a contraction, right? Pullback this year in 2023, decline of 20% revenue, and negative free cash flow for the year. So that's obviously not great news, but the company definitely has a lot of tailwinds. So they are expecting, these are all the different sectors and industry that they belong to. So obviously 2023, we're seeing a bit of a hiccup for Zebra Technologies, but of course, long-term, 5 years, 10 years down the road, if there is more digitization, right, of a lot of different industries, there's going to be a lot of demand for their products and services. So digitization and IoT analytics, 12% CAGR expected. Automation, 10%. We got mobile and cloud computing over 10%. On-demand economy, 8%, which again is e-commerce, and artificial intelligence over 18%. So there's definitely a lot of tailwinds that Zebra Technology is working with, and they have really done well. I mean, if you take a look at the last 9 years, from 2013 from $1 billion to over $5.7 billion. So they have grown revenues by 6x. We've got gross profit also going from $503 million to $2.6 billion. So that's a 5x growth. And operating income has gone from $171 million to almost $1 billion. It's almost about 5 to 6x growth for the company over there as well. So every single thing over here on a metric basis has moved in the right direction. It's been growing consistently. Again, each year they are moving in the right direction. Shares outstanding is very, very flat. So they're not diluting shareholders like crazy. And diluted EPS has gone from like $2.63 to over $8.80 for the company. Profitability margins, again, very strong, 46%. We've got very strong return on capital, assets, and equity. But of course, balance sheet is a little bit of an issue because the company's got little to no cash with a lot of debt. So net debt is also positive for Zebra. And of course, current ratio and quick ratio is not that great either. So this right here is giving the valuation. So all that being said, valuation is lower, especially after the fact that it's down 19-20% on the day today. So we're trading on a non-GAAP forward basis at just under 20. Price to sales a little bit over 2. Price to cash flow at just under 28 on a forward basis. And this right here is going to be those earnings expectations for the company. Non-GAAP EPS expected at just over $15 and growing that to over $25 per share over the next 4 years. So if you plug in some of those numbers, we're looking at a growth rate of just over 12% for the business. So if we plug in, say, 12% growth, even if you go a little bit more conservative, right, 10% growth for the company, I'm going to plug in a 16 times PE multiple. We do a 12% discount rate, 10% margin of safety, and a share dilution of about 0.45%. We are looking at a fair value of just over $200 per share. Right now it's trading at $250. So it's actually not that far off, maybe another 19%, so almost exactly how much it's down right now. We would need it to be down exactly that much in order for it to be trading at a fair value. Right now it's at $250 right on the dot, and the fair value is at $201 per share. But I also want to point out that let's say that we actually do see Zebra Technologies earnings grow by 12%, then the fair value jumps to $220. Now we're only looking at about 11.5% potential downside. And of course, if you apply that flexibility range, which is plus minus 5%, then the upper target of that range is going to be 231, which obviously is going to be very, very close to where the price is trading at the moment. So that's going to be the entire analysis. But of course, we like to be conservative, so I'm going to go 10%. This is going to be that sensitivity grid. You can see that for yourself, depending on the different growth rates and different P multiples, where that intrinsic value, where that fair value might end up for Zebra Technologies. One of the main concerning pieces, actually two concerning pieces with this company are going to be, number one, the balance sheet. You guys should have already guessed that's what we were going to talk about. The company does have little to no cash with a lot of debt, current ratio, quick ratio below 1. So that's concerning. And number two, the future, right? The forecasted future. Can the company actually keep growing this year? They are expected to decline revenues, negative cash flows. Can they rebound 2024 and start to see some more momentum once again? Like I said, it is a small company, not a lot of volume. So again, 366,000 shares, very, very low liquid, low volume stock. And of course, we do have a little bit under $13 billion in market cap. This is going to be that support. So if you actually come over to the weekly chart, what you will notice is that overall, this has got a very nice uptrend. It's got higher highs, higher lows, consistently moving higher. So from like 1992, the stock is up a little bit over almost 10,000%. So it's not like it's performed poorly. It actually has done really well. But of course, from its all-time highs of well over $650, it is down over 60%. So we are now once again coming down to this support here. That's going to be sitting roughly at $231, $240. At those prices, I can start to look into this company in a little bit more detail. But like I said, balance sheet is something that is going to hold me back a little bit. If they had like negative net debt, it would have started to become a bit of a no-brainer at 200s. But of course, considering the balance sheet's not that great, we might have to apply a higher margin of safety. And the way you do that is basically coming back here. And then instead of 10%, you go with 30% or 40%. And then of course, you can start to see that the fair value obviously drops dramatically down to sub 180, sub 175. So I hope you guys enjoyed this video. Let me know in the comment section down below. What do you think about this stock? Again, this is a company that I don't think anybody's going to be talking about, but I do think there's potential here, but we just got to figure out the right pricing, right value for the business itself. So let me know in the comment section down below. What do you think about Zebra Technologies? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Don't forget, the first week of the month is the best time to join. Our Discord is now once again open. Link's going to be down below. As always, happy investing. I'll see you all in the next video.